You know, for something like 5,000 years, gold has been the ultimate symbol of wealth, of power. It's kind of funny, right? We spend a fortune digging it out of the ground just to stick it right back underground in these super secure vaults. But here's the real question. In a world of crypto and instant digital payments, why does this ancient shiny metal still have such a massive grip on our modern economy? So let's dig in. Right. This is the core puzzle we're going to unpack together. We're going to break down what really drives the price of gold. And I mean, getting past all the noise and the headlines to the fundamental forces that are really at play here. Because you see, once you understand gold, you start to understand the deep, powerful currents moving our entire global financial system. And look, we are not talking about small potatoes here. This number, $2 trillion, that's how much gold the world's central banks are holding in their reserves right now. This isn't just some old tradition they forgot to stop. No, it is a deliberate, strategic choice by the most powerful financial players on the planet. And the reasons why are, well, they're absolutely fascinating. Okay, so to get a handle on gold's price today, we've got to go back to basics and understand what makes this metal so unique. It really all boils down to a couple of core ideas that have been true for thousands of years, ideas that are somehow becoming even more important in our crazy modern world. I mean, just look at this comparison. It is wild when you actually see it laid out. On one side, you have this absolute physical scarcity. Seriously, all the gold humanity's ever pulled from the earth could fit in just a couple of swimming pools. It's finite. But on the other side, you have money that can literally be created with a few keystrokes. In a single bad year, a government can just, poof, create 20, 30, 40% more money. And that contrast right there is why gold scarcity is so powerful. Now, here's a term you've absolutely got to know: no counterparty risk. It sounds fancy, but the idea is simple. Think about it. If you own a stock, you're counting on that company to do well. If you own a bond, you're trusting a government to pay you back. But physical gold, its value isn't based on someone else's promise. It just is. That's why when everything hits the fan, it's the ultimate asset for settling up. It doesn't rely on anyone. All right, with that foundation set, let's talk about the first huge driver of the gold price. And it involves maybe the most powerful financial force in the world, the U.S. Federal Reserve. The decisions made in that building send ripples through every single market. But the relationship it has with gold is, well, it's special. And this slide just lays it out perfectly. The best way to think about it is like a seesaw. On one end, you have gold, and on the other, you have what we call real interest rates. All that means is the interest your bank pays you minus the rate of inflation. So when real rates are high, your savings are actually growing. Gold, which pays no interest, looks less attractive. But when real rates go negative, when your savings are actually shrinking, that's when gold's side of the seesaw goes way up. And this is exactly what we were just talking about, but in plain English. Think about your own bank account. If you're earning, say, 2% interest, but prices for everything are going up by 4%, you are literally losing purchasing power every single day. You're getting poorer just by standing still. In that kind of world, an asset like gold, which doesn't pay you anything but is a store of value, suddenly starts to look like a really smart move. Okay, driver number 2. This is the one we all feel in our gut. It's the one we see splashed across the news every single day: chaos. Global uncertainty has a price tag, and very often that price tag shows up as a higher price for gold. I mean, you can literally just map it out. Look at this timeline. The pattern is crystal clear. When geopolitical trouble starts to brew, investors get scared and they make a flight to safety. Money rushes out of things that feel risky and into things that feel solid. And what's at the very top of that solid list? Gold. Every one of these events creates what traders call a fear bid, pushing the price up as people look for a port in the street. And this quote just nails it, doesn't it? For a lot of the big players, for entire nations even, holding gold isn't about trying to get rich quick. It's about having an insurance policy. It's about owning the one asset that you know will still be worth something when everything else is falling apart. It really is catastrophe insurance. So let's get to our third and final driver. And this one is a huge, slow-moving earthquake happening just beneath the surface of the global financial system. It's a revolution in who is buying gold, and more importantly, why they're buying it. And honestly, this might be the biggest long-term factor of them all. Okay, this chart tells such a powerful story. For decades, central banks were actually selling off their gold. But just look at that highlighted slice. In the last few years, they've done a complete 180. They've become massive buyers, vacuuming up over 1,000 tons a year. That's a huge chunk of all the new gold that's even mined. This creates this enormous, steady source of demand that just wasn't there before. It's a total game changer for the market. So, what's the deal? Why the sudden shopping spree? Well, it's all about strategy. It's a quiet move away from a world that completely revolves around the US dollar. After countries saw Russia's dollar reserves get frozen overnight, a lot of them got nervous. They're now looking for a truly neutral asset, one that no single country can control or switch off. This whole trend is sometimes called de-dollarization, and it's a massive tectonic shift in how the world works. Okay, so we've talked about the Fed, about global chaos, about this huge shift with central banks. But let's bring it all home. What does all this actually mean for you? How can you take this and make sense of the markets? Here it is. This is your mental checklist. The next time you see the price of gold making a big move, you can run it through these 3 simple questions. First, what are real interest rates doing? Is money in the bank growing or shrinking? Second, what's the level of chaos in the world? How much fear is out there? And third, what's the latest on that big, slow trend of countries moving away from the dollar? These 3 forces, they're the engine. And that kind of leaves us with this one big thought to chew on. At the end of the day, the story of gold isn't just about money, is it? It's really a story about our confidence, our trust in the entire financial system. And as governments keep creating more and more currency to deal with their problems, this ancient metal forces us all to ask a very, very modern question. In a world where money can be printed without limit, what is the real value of something that can't?